Good morning, welcome to this update on Friday the 7th of October, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk you through the markets and the news this morning. Well, today's non-farm payroll day, always a big day for us. Also worth mentioning is over the weekend we have the second presidential election debate. But before we do anything else, we need to talk about something we saw on the pound overnight. Which is commonly termed a fat finger event or a flash crash. Basically, this has now become a generic term for a sudden movement in price, and this is what we saw here. This is the pound daily chart, and overnight we saw a massive spike down to the sort of circa 118.50 level, as low as that. It was a very, very sudden event. I put in a 5-minute chart here just to show you exactly what happened. Now, the exact reason that these events happen, and they have been happening more often, aren't always known. There's certainly nobody saying precisely what caused this. But the root reason is a lack of liquidity. So this event happened at about 7 minutes past 2 UK time this morning. So we're in the Asian session, which is always lower liquidity in the first place. We're ahead of non-farm payroll day, where traders can be out of the market like we'll look to be ourselves. And we potentially have triggers from algorithmic computer programs. Personally, I think one issue here is this level I've got marked on this 5-minute chart is the 1.26 round number, which in itself could be significant. Yesterday's the low of yesterday was about 126.20, so price could have just drifted below that 126, triggered a load of entries or by algorithms, etc., and whoosh, down we go, because there is a lack of buying pressure. Now, in a normal market or in a balanced market, there would always be some buying pressure, but with the Brexit scenario, we've had a strong downside week so far on the pound. There are a limited number of buyers in this market, even when the market is liquid, or a more limited number of buyers, so that would exacerbate the situation. So essentially we get a trigger, and then potentially a lot of computer trading, which is self-perpetuating. Now, price has bounced back. It's not bounced back to where it started, which suggests this isn't quite a one-off event, or such a flash crash has happened by purely error previously. We would have seen price make big moves in other markets and then basically return to where it started. That's one of the reasons that I think the key level here was 126. But the reasons from our perspective are irrelevant. From a trading perspective, we need to see how this candle plays out today. Bear in mind, we've got non-farm, which is going to influence it anyway, before we make a conclusion on that. Personally, I think going forward, I'll be ignoring the wick of this bar if let's say it was to end up like this at the end of the day, for the purposes of trend lines or fibs, channels, anything like that. I'd simply ignore that low and use the close as a more or another level or another point, sorry, so, such as the low over here, as being significant, and certainly in the short term disregard that low as potentially being an anomaly. So hopefully that explains that to some extent. Obviously, at this moment in time, nobody's specific. It may be that nobody can actually give us an answer why that's happened. Fortunately, from our perspective, we were only ever looking for short entries in this market anyway, so if we'd been in a short trade, we could have benefited by that move down, even if we wouldn't have got down here because we weren't around to close a trade manually or whatever. Even if our target was only 125, we certainly would be in profit from that perspective, because we had the downside in this market. And in a market which is somewhat one-sided like this, we'll also always have that direction in which the trade moves, because we're not traders who buy against that type of fundamental Brexit scenario. So in this scenario, we are somewhat protected. Okay, going forward, let's have a look at the news for today. Well, let's start with yesterday. We had unemployment claims in from the US, which was a nice figure, a reduction in the claims, which is obviously positive, ahead of a forecast of 255. We came in at 249. This is weekly data. It isn't necessarily a guide to what will happen with non-farm this afternoon. Before we have non-farm, we have manufacturing production from the UK. That will be interesting. As you can see, previously we had a minus 0.9. We're now seeing a significant recovery forecast to 0.4. Potential for that to be even better, because what we're starting to see play out is the low value of the pound, whilst the UK still has that access to the EU markets. So it's sort of a win-win situation for exporters. The same time as non-farm, we have employment change and unemployment rate for the Canadian dollar. Naturally, that's over or somewhat overlooked by the significance of non-farm. Well, we've got the main data, which is the non-farm employment change. We had data last month of 151k. We're forecast at 171. So anything above that's going to be positive for the dollar. Anything below that's going to be negative potentially for the dollar. Although I personally think that anything above 150, the market will take as being sufficient, because the talk has been from the Fed and the speakers from the Fed that really the key number is about 150 for ongoing continuous growth in the employment sector there. We also keep an eye on the unemployment rate, which doesn't necessarily follow along identically with this data, and we also have the average hourly earnings, which is also seen as critical. We forecast at 0.2. We had a 0.1 last month. I believe that was a slight disappointment, but this is an area which tends to describe the quality of jobs that are being generated, and also the demand for skilled employment. If that comes into short supply, then there will be upward pressure on earnings. Okay, I mentioned this briefly before. The last time we saw the first presidential debate between Hillary Clinton and Donald Trump, we saw the market reaction to the perceived winner. This event happens at 9 p.m. Eastern time in the States. That's 2 a.m. UK time. It lasts for about 90 minutes. But this does mean that in the UK, potentially you don't want to be placing any orders Sunday night as the market's open, to allow this event to play out. I would recommend caution through to the official US Open in the afternoon of Monday, simply because that will allow the US market to fully react to how the result of that debate is perceived. So more caution on Monday. It will give time for the non-farm results to have played out a little bit further. Now here's the US dollar from yesterday and through to today. We've been constantly watching this 96.20 level here as being significant. Sorry, that's not 96.20, that's 96.70 now. We were watching 96.20 as a significant level here. Any breakthrough there we considered dollar strength, though we have been looking for opportunities certainly this week to trade dollar strength. Yesterday would have been a good opportunity, but unfortunately that dollar strength prevented pullbacks in markets where we were looking for entries based on that pullback. Overnight we've had a push long in this market. The DX, the dollar index, has been right up and it's touched virtually on $97. We're above this trend line at this moment in time. This trend line goes back to November 2015, so is significant. The rate rise last December by the Fed didn't take price above this trend line. So the fact we're above it now is suggesting that sentiment for the December rate rise from the Fed is strengthening. Certainly, if we get half decent non-farm figures, I see further long side in this market, further upside. If we see poor figures, we may see a break below this level and back within the triangle, which would be somewhat disappointing, because outside this triangle we've been waiting for a long time. We do have plenty of scope for upside and movement in markets, which is what we ideally look for as traders, because it's movement that we trade. Okay, over on the euro, the euro hasn't broken its equivalent trend line quite yet, but it's very close. Again, good non-farm data will get as the downside, and we're looking for in this market, and we might finally see this year some decent moves going through to the back end of the year. That is also shown on the US dollar JPY chart, on the yen chart. We had a breakout of this long-term trend line channel. Although this is the latest version, there's been something very similar right back to the beginning of the year. We've broken out of that. We were looking for a pullback in the first instance of this 101.80 level. There's a level here we'd look for a pullback in order to take this market long. We're now at a key level of about 104 there, which again we could see non-farm push price above that level on good numbers, giving us the opportunity next week for the look of the pullback there into the long side here, which is really what we've been looking for almost all year, because that's our preference. The Bank of Japan will be liking this at last, and they may even be helping it along. You never quite know with the Bank of Japan. Here's the Aussie trade that we've been looking at. We're in this on a 4-hour head and shoulders. This is the neckline for that head and shoulders. As I said a moment ago, we were looking for a pullback to that level, but the strength of the dollar yesterday meant that didn't happen. A limited or poorer results on the non-farm might give us that pullback through non-farm. We won't trade that. We may have to wait for price action to trade that. I'll see how that pans out on Monday. We certainly won't have an order in there resting into non-farm. We'll look to have as much risk off the table as possible. In this instance, we've got stops at break even. We've not trailed the stop at this moment in time. There's plenty of room for movement there, and allowing price to pull back, but still heading for our target down at this sort of 0.75 level. This is the Kiwi. We were looking for a pullback into this 7,200 circa level. Again, that dollar strength has prevented that happening. We've seen quite a significant weakening of the Kiwi overnight. Again, this is something that we may not now see. If we get some strong non-farm figures, we may not see the pullback to this entry here. If that's the case, then that's the way it will be. This order will come off this morning. We won't be holding that order on the table through non-farm, simply because volatility and just too much risk. If price does come back to here, we'll look for another intraday opportunity into next week to get back short this market if it plays out as we anticipate. Just to bring you up to date on gold, we've seen further downside on gold since we saw the big move down on what day was that? Am I in the daily chart? Yeah, earlier in the week, I'm going to say. I'm not sure what day it was now, but yeah, we came down to this level here, and we saw a pullback, and then we've seen further downside to this market. What we're really interested to see is that was Tuesday. The reason I know that was Tuesday, because I said on Tuesday's video that event, that big move had happened before the data is collected for the Commitment of Traders report that we'll see on Friday night UK time. That will allow us to interpret what, or potentially allow us to interpret exactly what was happening, and may give us a better picture of what we want to see happening to this market going forward. Have the commercial traders realign themselves? We've had a short signal from the commitment of traders really going back to April all through this area here, suggesting that the market needed a pullback. We should get an indication of whether this pullback, how sufficient that was, and that may give us an indication of whether we need to be looking at levels circa here or maybe down at 1200. I have read certain things in the press saying that there's potential for this market to come even lower. Not that that matters to us. We'll only look and trade the technicals. If price was to reach this level without a commitment of traders signal, we would still be interested in a long trade, but we'd be looking for a price action reversal. If we get a commitment of traders buying signal, then we might consider to be a more aggressive entry on that basis. Okay guys, so non-farm today, caution. Remember the US presidential election before you head into the markets next week. So yeah, have a good day's trading. If you like the way we set up, if you're interested in improving your trading, come along to our free 4-hour event on Wednesday, October the 19th in London. That's 4 hours of live trading alongside our most experienced fund managers. That's absolutely free. If you are interested, just go to the Phoenix Blue website, click on the events page, and you can click through, leave your details, and we will give you send you an invitation and all the joining instructions for that event. But again, absolutely free, chance to trade live. We'll also talk to you about how we trade, how we analyse technically, fundamentally, and through the commitment of traders report. And you'll also have the opportunity to speak to less experienced traders from Phoenix Blue who have seen their trading improve significantly since adopting the techniques and the analysis that we use. Okay, have a great weekend, and we'll speak to you again on Monday. Take care.